Hi, welcome to this video day, which is on the 13th of November. We are on Saturday. We're just going to be looking at trend following big trends in this video and some opportunities in the market right now. Now, in terms of the trade setups we want to look at in this video, they are going to be Euro against the USD, also Euro against JPY, Euro GBP, and finally a Euro correlated currency, the Swedish krona, against the USD. Now, in terms of the fundamentals, we view them as heavily bearish of the euro, and they're going to get worse. Okay, now in terms of the technicals, they look really attractive as well. There's really big downside potential in the euro and euro correlated currencies in our view. So what we'll do is we'll go now and take a look at the trade setups, but just before we go to the charts, please just do keep in mind it is my view as of right now. It can of course change in line with the market action and conditions. If you want all our trading techniques, you want to learn our trading strategy, and also check out our daily technical sentiment analysis of 14 FX pairs, just click on this link beneath this video. You can get live access to our member center. You can also join our Facebook group of traders, follow us on Facebook, and finally check out our recommended regulated broker. Right, first trade setup we're going to look at is going to be Euro USD. Right, just in our member center, this is a chart of Euro USD. Now, in terms of the euro being bearish since 122, we're now above 114. So it's moved down around 800 pips. We've just been selling rallies in the euro. And yeah, it's worked, but the volatility hasn't been that big. Now, before I discuss how to play this trade, we need to look at the monthly chart as well. I just want to go through some reasons why we are so bearish of the euro. And I just want to go to this chart first of all, which says why the Fed ought to be more hawkish than the ECB in one chart. The Fed are more hawkish. They're already cutting stimulus back. ECB are nowhere near cutting stimulus. Okay, rate rise is going to come quickly in the US. They won't be coming quickly in the Eurozone. I'll discuss that in a little bit more detail in a moment. But this is to do with GDP. And you can see US GDP going up in line with the trend, which is the dotted line. COVID hits, bang, down we go. Then we make a nice recovery. Eurozone takes a really big hit, recovery, and now we're kind of flatlining. You can see here, Eurozone GDP deviates by 7 versus trend, United States just by 3.5. Not only that, but inflationary pressure is stronger in the US than in Eurozone. Sure, it's up in Eurozone, stronger in the US. So monetary policy going forward favors the USD. Now, next chart is to do with ECB stimulus. Look at the rate they're printing money. Okay. Now, a lot of people in the market are betting that the ECB will raise rates next year. Christine Lagarde, who is president of the ECB, has said there is no chance of that happening. Okay. And there isn't, because you've got really diverging growth in Eurozone. Some nations are doing okay, but others are in really bad shape. Italy, Spain, Portugal, Greece, the southern nations cannot do without this stimulus. So they're going to have to keep printing money. Sure, the Netherlands might be doing okay, or Germany, but the ECB has to deal with a load of diverse economies. It's not a United States of Europe like a United States of America. Okay. Now, if you look at the ECB balance sheet, equal to 79.6 of Eurozone GDP versus the Fed's 36.8. And the Fed are reducing their balance sheet. That is clearly bullish for the USD in our view. We've all heard about the energy crisis. It's happening all over the world. It happens happening in the US, but in Eurozone, the impact is more on the Eurozone economy than on the US economy. Now, this is natural gas and electricity spot prices. They've fallen back a bit since I posted this chart, but really impact on the consumer and on GDP. This is an interesting chart. What you've got here effectively is Europe is being held hostage by Russia in terms of gas. Russia supplies the gas, and Gazprom, they start to refill gas storage sites. But look, you've hardly got any gas. Okay, Radon National Gas Storage is a huge facility the size of 240 full-size football pitches. You've got a lot of tensions between the EU and Russia can just turn off the gas. Also, you've got tensions between the EU and Belarus or Belarus. You've probably seen all those problems with the refugees on the border between Belarus and Poland. Lukashenko, who's the leader of Belarus, a bit of a loose cannon, is threatening to not allow any gas to come through the country. 60% of European gas flows through Belarus. That's serious. And then my final chart I want to show is this one. Most Eurozone recessions are led by commodities. So what you see here, orange line, commodities really spiking up. Blue bar is recession, comes shortly after. Again here where my cursor is, big spike up in commodity prices. Recession follows straight after. Now look, you've got a big spike up. You're going to get another blue bar. And a lot of analysts and forecasters are saying that Eurozone is on the road to recovery. It's not. I mean, I could also add in China. China basically major trading partner with Eurozone, particularly Germany. That's the China credit impulse. This means China is basically slowing. Okay, the light blue line, that dark blue line, which is German PMI, new orders, that's going to follow it down. Loads of German cars go to China, obviously, a lot of other goods. So slow up in China will hit Eurozone as well. So there's not a lot of good news coming. I think also we've got French elections as well, haven't we? It's going to get a lot worse in Eurozone. I think the market still isn't seeing how bad it is, looking for rate rises and a Eurozone recovery. It won't happen in our view. Now, in terms of this setup, it's an easy one to play. I mean, the way we did it was we've been trading short, just basically getting stopped out, selling the rallies. This is the last rally we sold, 116.40, big red down. But that is the decisive red that takes us to a new yearly low, and then we follow through a bit to the downside. So it's basically 200 pips so far. But I think we're going to 110. You can see that up there on my monthly support. Then I put 1,000. I meant 105. Let me just show you the monthly chart. Okay, so I think we've got resistance on these three bodies here, which is just below the 116 level. Then you got 110. We should get there longer term, and then possibly down to 105. Things are that bad in Eurozone. So in terms of this one, any rallies back to these resistance lines above 115 are selling opportunities. My own view is if you wanted to come into it, I'd just sell, okay? Then you can add on a rally, okay? But at least you'll be in if we do start going to the downside. Volatility's been low in this pair, but I think it's going to basically pick up. Long way to go on the downside. The risk is not that much at all. It's only 120 pips for us at the moment. And a lot of downside, you got 400 to 900 pips on the downside. Sorry. Right, let's go and take a look at Euro JPY. Right, we're on Euro JPY. Now, in terms of here, my cursor is from 129. Look at that for a rally. It's 450 pips, no red candles. I wish I'd have bought it. Okay, I was trying to sell and missed. But when we get up here, you do have speculators really long of the euro. In terms of the yen, generally, it's just very, very oversold. Speculators holding, I think it's a 2-year high in terms of short positions. So we felt this move was overdone, and we wanted to sell through 133. We get the entry. Then you get this messy price action. You've had that in a lot of pairs recently. Then that's the decisive red in our view to turn the trend bearish, and we're off to the downside. And speculators are still very, very heavily long of the euro. So I think that points to a move to 128. In terms of this one, it could be sold back to the 131 level. You can see this red here. That was quite a nice long tail. It's exhaustion. Then we get the next red tail at 131. Can't do it. Then we're down. So 131 should hold. Okay, so sell rally back to 131 with a stop behind here, i.e. that tail. Okay, if we start to move lower, then basically just sell at market and then have a stop, let's say 131.20. Well, I've got it 131.50 back here at the moment. I can pull that down if we start moving to the downside. Should get to 128. Longer term, we could get to 120. Reason I think that could happen is if you look at the yen, yeah, it is the number one safe haven. We have had stock markets hitting multi-year highs in this period, but it hasn't hurt the yen. The yen has actually strengthened. I think personally the risk on will end and the yen will firm up. But really, in terms of the yen, speculators being so short is the short-term driver in terms of this pair. But longer term, keep your eye on risk off coming into play, which I think it will. So yeah, we could see a really big move down to 120. At the minute, we're looking for 128. Euro GBP. Right, in terms of this pair, they've got a big blue candle. We noted it last week. Bank of England calls that. Basically, Bank of England had indicated that they were going to raise interest rates. Then they kept them on hold. Okay, so you saw the market react against the pound and it got sold off, or the euro got bought on the GBP. But the Bank of England did say, they would be raising rates in the next few months, which I think they will. So I think that was an overreaction. We have this blue candle come up. We thought that was exhaustion. We just couldn't, it's a long tail basically. Then this one confirms it. Tail can't reach tail. Nice red. Then you get a couple of blues come up. Red trying to get higher here. Got two lower highs. Nice red. I think that's the end of it for the bulls. Okay. So in terms of monetary policy, clearly favours the UK in our view, and I would argue the UK economy is in better shape. Now, two ways of playing this one. Now, in terms, just before I talk about how to play the entry, we're looking for this level here, but then we're looking for big monthly support at 80, which is way down the bottom of my computer screen. I just feel that the euro is going to have a really big move to the downside. Yeah, fair value is 80 in our view. Now, in terms of playing the trade, if we rally back up here, okay, towards the 85.60 level, just look to sell on weakness with a stop behind here. What about if we don't rally? I would say sell through the blue tail here. So you just want to see a new low, okay? If you do that, the stop can be behind this high here, okay? At the minute, I've got my stop just behind this level. I'll bring it down behind the high if we do break lower. You can see how we play at the member center, but that's the way I see it right now. I think, we could be confirming a big move to the downside. Right, last pair, USD SEK. Sorry, I've gone to the wrong page. Here we go. USD SEK correlated with the euro. You very often find, we say this regularly, if the euro's in a big downtrend, the correlated currencies will go down quicker and vice versa in an uptrend. Okay. Now, in terms of the fundamentals behind this one, obviously Sweden very correlated with the eurozone economy. There's a lot of trade goes on. We're obviously bearish of eurozone, but they've got a really dovish central bank. The Riksbank, probably one of the most dovish central banks around. No intention at this moment in time of raising interest rates until 2024, which is obviously a long way off. So monetary policy obviously favours the USD. Also, what I would say in terms of the Swedish krona, if you look at it over history, it really does correlate with global growth as well. So when global growth is really expanding, the SEK is really firm. When it's contracting, the SEK is weak, okay? And we've got contracting global growth as well. Now, in terms of the price action, we were waiting last week for the 860 level to give way. Frustrating, it's just getting tails come through the level and not following through. This big blue changes all that, and then we follow on. Now, my own view on this one is you've got a long way to go on the upside if our view is correct. 9, then 950. I'll show you the monthly chart. So we break out above this 20-month moving average, the green line, and the 880 level. That leaves the way open for 9. And then I think fair value is probably up at 950. Okay, so a lot of upside potential. Now, in terms of buying it, you could buy it through 880. stop behind 870, okay? Or what happens if we did have a dip back below 870? You could come back through the level, okay? If we did go to 860, I don't think we would. This is a big level of support. You could key off that level of support. Personally, I think this blue looks really, really bullish, and I'm looking for more upside. But you never know, you might get a correction, but that correction would be a buying opportunity. So, yeah, the pairs, since we looked at them last week, they're all doing okay. Now, in terms of Forex markets generally, I think we saw a little bit more volatility towards the end of last week. Yeah, I'm sure for many traders it's been frustrating. You get a lot of stop-start action. Pairs look like they're going to go somewhere, then they don't. That's happened in a lot of pairs recently, but back end of last week, a bit more volatility coming in. I think we're going to hopefully get more volatility in the week ahead. Right, thank you very much for watching. That's the video for today. Take care. Thanks again.